Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Certainly moving into this new week, we had a couple of key factors that we need to be concentrating on. This dollar correction that we got on Friday is a bit of a technical correction, no real driver behind it. It actually came on the back of some strong US data, decent retail sales and also a strong Michigan sentiment number. But there was technical selling pressure that came on the dollar index on a breakout to a new multi-year high, and that saw a significant switch around in a lot of these forex pairs and also drove gold and silver sharply higher as well. So this is a key legacy that we're holding on to from last week, and we need to be concentrating on this week. Also, on Monday morning, early on, we had the Japanese GDP data for Q3 annualized as a fall of 1.6%. That took Japan into recession, second quarter in a row that they've had falling growth. And now that puts a lot of pressure on Shinzo Abe and the concept of Abenomics, because is it working? Is it still being able to drive the improvement in the economy that they were looking for? It seems as though this corporate sales tax, the sales tax hike that we had last few months ago seems to have had a significant impact on the economy, and it is now in decline. Now, this puts into question whether they can actually bring on the next sales tax hike that's meant to go from 8% to 10%. And it looks like at the moment that sales tax hike is going to be having to be kicked into the long grass. Now, this also brings into question the concept of Abenomics generally as well. And there may well now be a snap general election called to try and re-engage the mandate and try and ascertain exactly whether that is the course that the country wants to go down. The impact overnight has been for a sharp correction in the Nikkei. Now, normally bad news in Japan tends to be good news for the equity markets, because it tends to drive further quantitative easing from the Bank of Japan. Now, the big correction that we saw, 3% to the downside, just brings into question whether markets around the world generally are going to be hit by that, because certainly at the moment the equity markets have been fairly flat and not really going anywhere, and it could induce a bit of a near-term correction. So how does this all play into the FX markets? Well, certainly euro-dollar has had this big jump on Friday. Now, whether the move can be continued will depend on this key resistance at $1.26. That has been the key ceiling for euro-dollar over the past few weeks. And euro-dollar needs to break through that to continue this rally. At the moment, 126 remains firmly intact, and it seems as though the euro has started to fall away again. And if that is the case, then it could well come back to retest that recent low around $1.2357. So how's cable looking? Well, cable is actually, I think, in a worse state than the euro in terms of the outlook on the charts, and certainly the sharp move to the downside following on from that Bank of England quarterly inflation report that we got last week has shown no real signs of stopping. Even though we had a slight rebound on Friday, there was still the downside pressure was regenerated today, and it looks like we're going to be pushing back towards the lows once again, and further downside in due course. Dollar yen's an interesting one, because at the moment it's still playing out as to how the yen strength has impacted following on from that Japanese GDP. The yen has strengthened on the back of a flight to safety, but as I said earlier, the whole concept of QE in Japan should theoretically drive a weaker yen and subsequently dollar yen higher. Now, whether that actually does come into place or not, and it'll be interesting to see, because at the moment the technical analysis looks like that dollar yen continues to be a nice buy into any weakness, and further gains should be seen in due course. But at the moment, all the key reaction highs are still in place. All the higher lows are still nicely in place. $115.50 is the low overnight. 114.88 is the first key reaction low. So that at the moment remains in place. So how is the indexes looking? Well, certainly Wall Street, as I said last week, went basically sideways. Didn't really go anywhere. And it's sort of coming towards the end of earnings season now. So what's the next real catalyst for this? Well, I think coming into this week, we've certainly got a lot more data to drive markets. The initial reaction, obviously, to the Japanese GDP has been reasonably negative on these European indices. Be interesting to see if that continues. And we've got a lot of German data out this week, which could also, if that comes in disappointing, could drive markets lower. The S&P 500 needs to be interesting to see how it reacts to the first correction, and it needs to come back towards, I think, a nice band of support between 1980 and up towards 2010. And if that is the case, then I think that if it forms some nice support around there, I think it could be a decent buying opportunity. The DAX is a little bit different. It's been in a consolidation phase for the past week or so, but it looks a bit more toppy than the S&P 500. And if it does complete the top pattern below 91.49, then that would suggest over 300 points to the downside, down towards a target of 88.20. So 91.49 is the key level that we need to watch out for on the DAX. FTSE 100, interesting because it continues this whole outperformance, underperformance shift with the DAX. Every time that the markets are going higher, the DAX outperforms FTSE. Every time the markets are going lower, the DAX underperforms FTSE. So that's an interesting factor at play as well. And at the moment, the FTSE 100 remains in its nice recovery uptrend, but it's just beginning to show a few signs of strain, maybe a little bit corrective, but at the moment, the key higher lows are still intact. And the latest one is at 65.88 that you need to watch out for. So moving on to gold, as I said, a sharp turnaround in gold on Friday, 40 odd bucks to the upside, and we've seen now around about, I think, about $50 or $60 in total from the low. So where are we looking at on gold? Well, we had a similar sort of rally in October, which went about $70 in total before the sharp selling pressure came back in again. So far, as I said, we've had about $60 to the upside. It's now up above, now this is the key point, it's out above $1,180. Now, that is, I think, the line in the sand. If it can hold above the support there and start to build, then the near to medium term improvement that we've seen in the momentum indicators can continue. But if it starts to lose that 1180 support, then I think we could start to see that just the buying pressure just drift off again, and the sellers back in control. So throughout this week, we've got, as I said, a significant amount of economic data to drive the markets. Starting out with the US industrial production on Monday, I think that will be interesting to see how the markets react to the first piece of data that's followed on from this correction. On to Tuesday, we've got the UK inflation, and interestingly and importantly, the German ZEW economic sentiment. On Wednesday, we've got a lot of central banks giving updates. We've got the BOG with a monetary policy statement. That obviously is very interesting now coming up after that GDP number. But then we've also got meeting minutes from the Bank of England and also the FOMC. That FOMC meeting minutes will obviously be a big driver of markets, I think, obviously Wednesday evening and into Thursday. Then on to the Thursday, we've also got the flash manufacturing PMIs for China, Germany and France. Obviously, again, but very important numbers which could well drive sentiment on Thursday as well. And that's basically bringing our week towards a close. And we've got a little bit of UK data with the retail sales and US CPI. And Friday is the Canadian CPI as well. So that sort of wraps us up. A lot to pack in this week, which could drive markets. So I wish you good luck in your trading throughout the week, and I will speak to you next time. Thank you.